Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths in every financial filing. Today, we're diving into Visa's latest report, and let's just say sometimes the big players make moves that might go unnoticed unless you're looking closely. Visa, the global payments giant, has filed a current report detailing an interesting financial maneuver. It might not be a groundbreaking earnings announcement, but it tells us something about how they manage large financial obligations, especially those related to legal matters. So, what is this all about essentially? Visa has decided to put a hefty sum of money, $500 million, into a special account. This account is designated for a legal settlement fund, specifically for US litigation. Think of it as a dedicated savings account for potential payouts related to lawsuits. Now, here is where it gets a bit technical, but also quite important. When Visa tops up this litigation fund, it has an impact on certain types of their stock. Specifically, it affects their Class B -1 and B -2 common stock. These are usually held by financial institutions. The way it affects them is through something called dilution, by lowering the rates at which this stock can be converted into their regular class or common stock. Why does this matter to us as investors or observers? The filing itself explains that this action has the same effect on the company's earnings per share as if they were buying back their own class of stock. When a company buys back its own stock, it can signal a few things. It might mean they believe their stock is undervalued, or it is a way to return capital to shareholders by reducing the number of outstanding shares, thus increasing the ownership percentage for remaining shareholders. In Visa's case, this specific mechanism is tied to their legal obligations, and it is a way to manage the financial impact of those obligations without directly impacting their cash flow in a different manner. Even though this isn't a full financial report like a 10Q or 10K, these types of filings called 8KS provide crucial, timely information. This particular update on the 18th of September 2025 shows proactive financial management concerning potential legal liabilities. It demonstrates that Visa is setting aside significant funds for these matters, which is generally a sign of responsible financial planning, especially when dealing with the uncertainties of large-scale litigation. Let's look at the securities Visa has registered. Their class of common stock trading under the ticker symbol V is listed on the New York Stock Exchange. This is the stock most everyday investors would be familiar with. Then there are various senior notes which are essentially debt instruments. For instance, they have notes due in 2026with a 1.5% interest rate. Also on the New York Stock Exchange, with the ticker V-value. They also have notes due in 2028 Pascal 2.25% interest, with ticker VFM bar. And moving further out, they have notes due in 2044 that pay a higher rate of 3.85%, identified by the ticker VOC 4. These different debt obligations represent how Visa raises capital for its operations and growth, and the varied interest rates reflect different market conditions and durations for borrowing. Visa is clearly not an emerging growth company. They are a mature, well-established global corporation, so this box remains unchecked as expected. The report is signed by Chris Suh, who is the Chief Financial Officer. This signifies that the company leadership is aware of and stands behind the information provided in this filing. Now let's put this into perspective. Visa is a giant in the payments industry. They process trillions of dollars in transactions globally. This $500 million deposit into an escrow account for litigation, while a large sum for most companies, is relatively small in the grand scheme of Visa's overall financial operations. What this indicates is a structured approach to managing potential legal headwinds. By setting aside these funds and adjusting stock conversion rates, Visa is essentially de-risking its balance sheet from specific legal pressures. From a Warren Buffett style perspective, we're relooking at a sound business that is proactively managing its liabilities. Visa's core business model is incredibly resilient, benefiting from network effects and the ongoing shift towards digital payments. The company's ability to generate consistent revenue and manage its financial obligations, even those stemming from litigation, showcases its strong financial discipline. One might ask if this litigation is a significant ongoing threat or a one-off event, without more context from past filings or news articles. It is hard to say, but the company's response suggests they are taking it seriously and managing it efficiently. The potential dilution effect on Class B shares, while technically relevant, is unlikely to significantly impact the broader class of stock performance, unless those B shares represent a very large critical portion of voting power or influence, which is typically not the case for publicly traded companies. The statement that it is the same effect on earnings per S-share as repurchasing the company's class of common stock is a key point for investors to note, as it suggests a contained financial impact that could even be viewed positively as a form of capital management. In conclusion, Visa's filing about the litigation escrow account highlights their commitment to financial transparency and managing potential risks. While not a headline, grabbing financial result, it is a testament to their operational maturity and prudent financial stewardship. It reinforces the idea that Visa is a company that plans for contingencies and manages its affairs with a long-term view. What is your take on Visa as strategic financial moves? Do you think this is a sign of strength or something to watch more closely? Let us know your thoughts in the comments below. If you found this breakdown insightful, please give this video a thumbs up and subscribe to Corporate Decoder for more analyses of the financial world. Don't forget to join our Discord community for further discussions. The link is in the description. Thanks for watching, and I'll see you in the next deep dive.